please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Nischint of Kotak Instl Equities joins us now to talk about all the NBFC earnings that have come out so far. Nischint, hi, good morning. It's been a good quarter for most of the companies, but you tell us, which are the companies that you liked, where you still have buy calls?
Sure. Good morning. NBFCs had an extremely good quarter across all the three parameters, which is loan growth, margins, as well as in terms of NPL reduction. I think across the board we've seen improvements, and a lot of stocks have rallied on the back of that. So to that extent, we are not very sure whether from a long-term point of view there is value left in many of the names. Yes, in terms of near-term momentum, things are going to be strong. In this backdrop, the segment that we are finding fairly attractive at this stage essentially is housing. Couple of reasons. One is that a painful phase of RERA GST is behind us, which means that demand gradually starts picking up from here on. You know that the entire affordable housing bit is doing extremely well at this point of time. And in terms of margins, there was a very surprising rate hike across players sometime last month. We would have ideally expected that because of the competition in housing sector, this entire home loan pain will continue for a while. But the way home loan rates have gone up, it's been a surprise. So which means that in terms of pressure on margins, possibly the pressure on margins would be less than anticipated, and the companies could surprise positively. And again, valuations, if you look at HDFC or LIC, have not really run up as much, and that's where we feel that there is value in these stocks.
Okay.
The other segment that we like at this point of time is the life insurance sector. I guess everybody is looking at the headline numbers saying that, look, ULIP sales have been strong. They may not remain strong next year because of the fact that markets could be under some pressure. But the fact of the matter is that today all the large players are focusing a lot more on protection business. And protection business essentially has extremely high margins as compared to the savings products. So if around 40-45% of the value is getting driven from protection business, and this remains an area of focus, then I guess these stocks would be would land up being good investment over a period of time. And in that sense, the monthly insurance numbers or collection numbers would tend to be increasingly less relevant than what they were last year.
Okay, Nischint, are you not worried about the hectic pace of growth in some of the housing finance companies like Indiabulls and DHFL? Or do you think that the market's good enough and that's why the numbers are so good?
So one thing is that we don't cover these names, so it would not be very accurate for me to comment on this. But yes, if things are picking up on the affordable housing front as well, then possibly in some of the names I would want to worry less than what I would have been worried last year, because that fundamentally there are some tailwinds that are really picking up.
Yeah, but
so I don't have any specific comments on these names, but if the macro is positive, I guess it benefits everybody to some extent.
Okay. You were talking about some of these housing finance companies. You like both HDFC and LIC housing finance in that space. But on LIC housing particularly, what kind of upsides do you see and what are you baking in terms of growth?
So we are looking at around 18 to 19% kind of loan growth, which really starts picking up from around 16 to 17% this year. The bigger issue here is in terms of the comfort on margins. We saw significant pressure on margins this year. Primarily because of the fact that while interest rates or the borrowing cost has not gone up, essentially on the home loan side we have seen significant pressures. And the whole argument that we are making at this point of time is that, look, home loan rates are going up. So even if there could be some pressure on the borrowing side, the ability of these companies to kind of, at this point of time to kind of manage these margins is much better than earlier. We have a price target of around 600 rupees on LIC.
Okay. Is there anyone you would worry, not just housing, I meant among all the consumer durable, the entire range of NBFCs, about poor ALM mismatch because this cost of funds went up suddenly?
Yeah, so one thing, okay, what actually helped these guys last quarter was that many of them are engaged in PSL related lending. So yes, we saw cost of funding going up in the month of March. But because these guys could downsell their portfolios, they were affected less. in the interim, maybe in last 1 or 2 months, they have been playing the yield curve, which means they're doing more of short-term borrowing than long-term borrowing. But they will need to bite the bullet, and they will need to raise, medium to long-term funding at a higher rate from now on, which means that margins will be under pressure, and which is what I said, that incrementally you will see margins coming under pressure, even if your asset quality and loan growth continue to remain fairly strong.
Okay.
So that is definitely a worry. The comfort that we have on the housing front is that your pricing power seem to be strong because you just seen a rate rise.
You'll downgraded anybody because of this worry?
I would not say downgraded, but yes, some of the stocks have run up on their valuation. So that's where we have kind of corrected a rating by a notch for names like a PNB Housing Finance, or for that matter, even somewhere like a Mahindra, where we are saying that I mean, the business is obviously in a sweet spot, but valuations are rich.
Okay, and finally, what about the wealth managers? You know, the Edelweiss, Motilal, that kind of stocks. They also saw a lot of rally for good reasons. You like them?
Yeah, so we have a coverage on IIFL, and this is one name which I think the company is fairly good, and this is the wealth piece is something which is extremely attractive at this point of time. But I guess again most of it tends to be priced in. I would put it this way, that these are the stocks which you typically buy when the market is sort of a little flattish, rather than buying these stocks when things are everybody is very excited about the markets, and basically the way equity markets are going to play out. So maybe from a long-term point of view may not be the best time to buy IIFL, but yes, it's an interesting theme, and post the demerger, I guess IIFL will, the wealth business of IIFL will make more sense.